long bond kind of says what Kimberly said. You know, sales were okay, not unbelievable, and doesn't seem worried about the Fed.
Well, long bonds are living in the most fabulous, extravagant form of denial we have seen since NASDAQ 5000. This is Bondac 5000. And by this time, 6 months from now, there is going to be a smoking crater in the middle of Wall Street with bonds written right in the middle of it.
So far we've heard,
my words.
So far, bonds are in denial, housing is in denial, consumers are in denial, and Douglas Kass, I know you've been in denial for many months. Now, this is a great day for a short seller like yourself, Dougie. What did you do, and when did you do it?
Well, I have, as you know, I've been short for several months now. By the way, if you believe the shop track data on retail sales, I have a bridge to sell you. It's a notoriously weak survey. The problem, and no one really is discussing it, and I happen to agree with Don, but Don, for much different reasons. I'm in Gary's camp, and courtesy of John Maudlin, I read Gary's 45 charts on housing over the weekend, which I would suggest everyone go to John Maudlin's site or Gary's site and take a look at it. Where the market is in denial is long arm of housing and its ramification. The consumer is weak. You can ignore Walmart all you want. I believe Gary is totally correct. It represents 9% of retail, ex-automobile. In Palm Beach County, there are 39.9 months of inventory of unsold homes. Unsold homes have trebled in the last 14 months. There's a builder in Pompano, that's Kass Builders, that in the Sun Sentinel today, they announced they're offering 4 years of tuition for any buyer's son, child, or grandchild.
But those are all rich people. But those are all rich people. And according to the New York Times, rich people are so rich that it doesn't matter. Palm Beach County, we're talking la creme de la creme, Doug. We're talking about
you. So why is there 40 months of unsold home inventory?
Well, I don't know why. I have no idea. I don't know anything about that market.
The real problem.
Wait a second. Let me get this story right. Today is your best day in many months as a short seller, as a confirmed bear. But okay, in many years. All right. But what you're saying is, it's not because consumer spending are strong. It's not because the Federal Reserve might raise interest rates. It's because this survey, what is it, Shopper Track, is all wrong and things are actually really bad. So in other words, you agree with Brother Shilling. That's the bottom line here. You guys are cross-referencing each other.
I'll go one step further. I'll go one step further, and I agree with Brother Don as well, but for different reasons. The dollar's decline is going to make it very difficult for the Federal Reserve to ease, for different reasons than Don sees. And that, unfortunately, Don is correct. Rates will be increased, not decreased. And the cornerstone of the bullish case in the stock market is that the price of oil will be forever low, and that we have paused in terms of the Fed.
You know, look, yes, you're right, but inflation is deflating. That has been my point of view, and it's not a problem. But Don Luskin, take us out on this real fast. On this dollar point, last week, you saw some of these signs on Wednesday, Thursday holiday, then again on Friday. The Treasury Department, looking at some review board, is now thinking about labeling China a currency manipulator. And I think we can agree, you and I, if there's one thing the markets do not want, it is a full-fledged American-Sino trade war, which would be a financial and economic disaster. Now, does this threat impact the market? Because stock's been going down ever since this surfaced.
Well, for one thing, the idea that we want a stronger yuan is like saying we want a weaker dollar. That is an avowed weak dollar policy. It is a devaluation policy. It is a disaster in terms of inflation. It's a disaster in terms of growth. But the real impact of getting into a trade war with China, of course, is that it just shuts down the whole globalization revolution, which has been the great source of growth in the whole world for the last 5 years. The global labor arbitrage between the West and the East has been the great engine behind the greatest story never told. You stop that engine, and we hit stall speed really fast.
This is Smoot Schumer and Holy Graham. Will Treasury Secretary Henry Paulson, and incidentally, as you know, Fed Chairman Ben Bernanke is going with him to China. Is Paulson going to fall in with this cheap dollar policy?
He's there. He's there because it's the bone that they've got to throw to the populists, both in the Republican Party and in the Democratic Party.
Yeah, we're going to come back to this. The bone thrown to the populists. That's a very important point. I want to pick up on that. It is another important example of Washington to Wall Street money politics. It will surely disrupt everything if Mr. Luskin is true. Meanwhile, on this program tonight, coming up, capital versus labor. Left-wing economic populism is all the media rage. Class warfare, tax the rich. We're going to debate American capitalism versus those who want France. Count me out. Plus, Sunday Unspun, Gallup's Frank Newport is here to take on the weekend spin machine. We've got Gallup's latest data on support for the Iraq War and troop withdrawal. And finally, a showdown on Iraq. Do we know how to win the war in Iraq? Why are we all so defeatist? And is there a coming coup d'etat, overthrow of the Maliki government? I believe, among other things, Maliki must go. Please keep it right here. Kudlow and Company, the best is yet to come.